Good afternoon. It's 3 p.m. on Saturday. Again, our time, just like normal. And someone was asking me how long have you been doing the webinars online at 3 p.m.? So the answer is since March 21st, 2020. So quite a few years, as you know. So we are used to the 3 p.m., not a nap time, but a learning time. So today I bring to you a topic, and I have no intention to go too deep about it, but I want to give you the idea, the sentiment, the understanding of the structure of it, which is estate tax planning, estate management. So anytime, as a first generation of immigrant myself, it's not like I know this forever of my life and I heard those when I was a child. Of course not. And the word of estate doesn't even exist in my childhood vocabularies. It doesn't exist. You know, have you heard of the color blue was never there before? Then they create the language, then the definition comes in. So you know what color blue means. You know what is blue. So estate, if you grow up in the environment like how I grew up in China back then in the 70s, in the middle 60s, 70s, 80s, there's no word about estate. So the estate planning here in United States of America and means that you plan, you do something about what you created. It's so meaningful for the first generation of immigrant because you are not the person grow up at the household and you are already a beneficiary of somebody else's estate. Maybe your mom and dad's, maybe your grandparents. So you not only understand estate, you already benefited from it in your life. That is a different layer of understanding. But today, what I want to do for you is for you to understand if you are a successful business owner today, you made money and you feel good and you look at your children and you look at the community you want to support and you're wondering what you would do if you die and what happens to your money, what happened to your business, what happened to your legacy. That is where estate planning will come to your mind. If someone just say that, do you want an estate planning? And you are like, do I need one? Right? That's your question. So we are going to answer that. Before we go further, and I do want to lead you through some of the slides to just brag about our company. And Community CPA is the company I created back in 1998. So it is a 28 years old company, and this is our website. You see it right now with me. And on our website, you see that on board with us, that button. It is a place where if you want to be our client, you got a bunch of data you want to give us, to show us before we have a meaningful discussion and a conversation, a plan for you. You upload that first. You go on board with us and you can create your own username, password, and then on that site, it will tell you what to upload, give you guidance. And you can become our client without have to wait until the office open. Our office opens 6 days a week, okay, from Monday to Saturday year round. We are not one of those, or we're not the rest of the CPA firms, only open Monday to Friday. So we care about the community we work with. A lot of our business owners are just simply very busy. They don't have time Monday to Friday. Saturday might just catch them to be able to think for themselves. You also see the button of appointment. That's where you can get into my time and immediately by looking at my calendar and book my time, and you'll be on video conference with me. And we also have another website, very important. That is our YouTube site. Our youtube.com community CPA channel and has this look. If you subscribe to our channel, then every time we have a meaningful webinars coming out, you get notification. You don't have to come, but you could choose to come. So that is how you will be updated with what's going on out there. You know how limited we are, right? And we either just know the people around us, which is no more than 20 people. And you just really know the people around you, about less than 20. Then the other side of the world is this social media world, which we know too much of, too many things that's not related to us. And it's just a place to kill your time. And the information out there, not even accurate. So it's like, you really have a limited outlay to really figure out what you need to get from these available sources. But Community CPA is one reliable place where you can get knowledge from. And I always say, folks, that when you search for knowledge, you need to look into the authoritative website, like the government website, the state website, the federal government website. Those are authoritative. They actually have their rules, regulations there. You don't need to go anywhere else, and you can check directly from there. Or you go for people who have licensed practice and they are actually providing knowledge to the public, like Community CPA. Obviously we do interpretation. So when new rules coming out, we interpret. We understand how to carry it on. So you can rely on us for that piece of information. Our firm, we are a medium-sized regional CPA firm. We operate in 4 different states. We have about 40 professionals in our team. We have attorneys, CPA, we have wealth management. So it is a CPA firm that is fast growing at the same time and serves an increasing need of the business owners. In today's world, small business owners, and you cannot rely on government fundings because they got cut already, and you want to continue doing your business, there is a lot of desire to know more. Buy yourself, do it yourself. Why not? If you can do it yourself, that's the best solution I have for you. So I kind of talked about our firm already. Just want to say that before I start this subject about estate planning, I want to say that obviously it's a free knowledge transfer, and so we don't have any responsibilities for how you use the information. Just make sure that if you really are at the point to make critical decisions, hire a professional. That's how you get things done. All right. Now, what is estate planning? Estate planning is a process of arranging for the management and the disposal of your hard-earned money during your lifetime and after your death. It is a big definition, right? It is almost like whatever you have to manage that right now and also make arrangement after you die. That's estate planning. So estate, it is representing values that's left by someone to the earth. So estate, you created things, you left that with value and is on earth, but you're gone to heaven. So that's estate. So the goal for estate planning is obvious. It's obvious. It is to ensure that your asset, whatever hard money you earned, are distributed according to your wish, right? To help minimize taxes. That's a huge one. To help you be in compliance all the time, even after your death. Because if you are not, if after your death, then there's mistake found everywhere on your tax return. You know what that means? That means people will have to change your tax return, increase your tax liability, and charge that money to your estate. And you are going to leave your children with $10,000. Your tax due is like $20,000 that just discovered. And are you going to leave anything for your children? No. You got nothing left and more liabilities, right? So for business owners, estate planning is crucial as it involves personal asset and the business interest. Business interest here just means the ownership. It involves what you have and also what you have in your business. The goal for estate planning for small business owners, is to ensure the business is going as what you intended to have it going. If you want to sell it, the planning gonna dictate to sell it. If you want to keep it, the planning document will dictate that to keep it. Okay? And if you want your loved ones to continue benefiting from the business, but at the same time you don't want to have anything to do with the business and your spouse couldn't handle it, but you just want your spouse to get money from the business continues. That is a planning. That is estate business planning. And the distribution of ownership is also something belongs to estate planning. You want to have your children own your business, and you don't want you want your children to start having your shares, and at the same time you don't want to pay gift taxes, then you have to do planning. You have to do it early now to get that done by the time you retire from earth, right? And is wills and trust are the same thing in estate planning? A lot of times we have client goes, oh, I already did my estate planning. Oh, what did you do? Oh, I got a living trust. I'm done. Oh, really? Is that the thing you do for estate planning? Absolutely not. Wills and trust are just legal documents that outline your intention, right? And, certain trust and certain trusts are just tools for you to plan, tools for you to pay less taxes, right? So estate planning is not about a one document or two. It is, again, I come back to the first sentence on this slide, is a process. It's a process of you living your life and arranging the future. Do I need to have estate planning? That is $1 million question. And we get that a lot from our small business owners. Do I need estate planning? That question is an equivalent question for, do I care about what I have today? Do I? Yes, I do. Do I care about what will happen to my money and business after I die? I do. If you say I do, you are married to estate planning. You need to do estate planning. If the answer is yes, then you need one. Estate planning can be as simple as one piece of paper, but it can also be as complex as a life journey. Really depends on what you have and how complex your life is. And if you just married once, have children from this one marriage, is simpler than you married 5 different times with 12 kids from different marriages, right? These are different. All right. So estate planning can also be a process in your lifetime. You heard me saying that. So I actually want to give you a picture of the estate planning. And when someone comes to me, let's say if you walked up to me and I know you have businesses and I also know you're doing really well. And on top of all of these things, I also know that you're in the process of getting divorced. Your estate planning, it would go through 3 different phases. Number 1, we are going to go through a thorough evaluation of your past record, making sure that if you are getting divorced, the data for the past is clear. Your ex not going to come back to you saying that whatever you did on this year, it was not right, that money is supposed to be hers, and whatever that happens, right? And then we want to do strategic planning for you for your current life. And we are going to meticulously, which means carefully, thoughtfully, step by step, prepare you for your future after death. So those are the three things. So I always say estate planning, it is not about one conversation, one appointment, one piece of paper, I'm done. It could be if your life is so simple, you only have $10,000 in your bank account. Okay? But if you are not that simple, and then you are involved three-dimensional estate planning structure, you need to deal with the past, look at the present, and plan out the future. So the rest of the slides, what I'm doing is just kind of outlay the past, the current, the future. So at the end of the conversation today, I want you to realize that, okay, I understand what means estate planning, and I will do one, but these are the things I think I will do. So that way, you can take your thought to your trusted attorney, to your trusted CPA firm like Community CPA, or even to your brother-in-law who is attorney, and have them get that realized for you onto documents. At the end of the day, it is words on paper. So what written is what becoming the tools for getting it done. So you may say that, oh, Ying, I hear you saying that. How to do it simple? I just want it simple. I just have, not a lot of money, but simple. Set up a will. It is really simple. It is a document you prepared before you die, and then lay out what you want the other people to do for you, right? You can write about funeral arrangement. You can write about how to split your $10,000, who gets what. But the key is you need to sign that will with someone to notarize it for you. So make it legit, right? What if someone come out goes, no, that will is a fake one. I have a real one. That would get so complex, right? You want to make sure that you notarize that, and you can give the notarized copy to your banker. You can give that to your son, to your children, and you can let people know that you have this will. You can leave the will with others, then you're considered done. That is simple. But can small business owner do it simple? There's many reasons why small business owners cannot do it simple. Because of many reasons. I'm just going to list these 4 big reasons. Number 1 is continuation of the business operation. So if you are wanting your business to go on, even though you die, but it goes on, then it has to be laid out in your estate plan, and that would be one of the key factors in that plan. If the owner wants the business to continue and with their children, then the plan will dictate which children, how to divide that to the children, who runs what. So it's all going to come together in your imagination and become a real black and white words on piece of paper or on a stack of paper, right? And asset protection is another reason for this estate planning cannot be simple. Estate planning safeguards the business asset from creditors, lawsuit, and other risks. What about you want to give the business to your son? What about your son right now just terrible? What about it is your son right now, he's not doing that great, but you have great hope and believe that he'll come to order before you die, then you don't want to give him the business right now, so he'll gamble it all out for you, right? So you need to make arrangement. By effectively structuring your estate plan, you can ensure the wealth is built inside of your business, is preserved for your future, for the business's future, for your son's future. There's two other reasons why small business cannot do it simple. Tax efficiency. And you may get taxed hugely if you're not properly planning your estate. Right now, estate taxes has this threshold, right? Right now it's 13.99 million. Sound like a big number. Because right now, it's not because, it is 13.99 million expires at the end of 2025. So President Trump can either up it more or lower it, right? Generally speaking, I do not expect President Trump to lower it because his 100% mission coming into the Oval Office is to protect the wealthy. The wealthy dies, they got too much money, so if you set the threshold high, they don't pay taxes. They don't pay death taxes like they would pay during President Obama's time. And he set that at 3.5 million, okay? So it's different. Politicians play with taxes. The reason they play with taxes is because they need money to do what they need to do. So generating money out of estate is one of the ways to make money. So, obviously we don't have any control, right? We're just trying to figure out what is the best way to not pay taxes if something happened and the estate threshold dropped down too much. And if the estate threshold drops down right now, it would be about 7 million. But right now we're at 13.99 million. So with that said, tax efficiency is huge for estate planning. And of course, the number 4 reason for small business owners can't have it simple is because they want their wish to be honored. As a business owner, how big our ego grows, right? We're like, okay, I own the company, so I'm going to decide on this, I'm going to decide on that. And you never hear anybody say no to you, right? So you got into boss mood by life experience. But after you die, are you still in the boss mood? No. After you die, you can be ignored because you got no more voice. So the only voice you have, it is this document. The document will make people who take over your things to behave. So you want that estate plan to provide clear instruction on how you want your business to be managed and distributed. By documenting your wish like that, you can prevent civil war among your family members, right? It is a real story. We have a client, the parents didn't really do a good job on the property distribution under their trust. So left with a crystal ball at a household, which is precious. It's a precious piece of antique. Don't know how much it will worth, and I never really asked. But the 3 children were fighting over that asset. This is where the parents could have done better job with that, right? So this is why small business owners, you don't have a way to make it simple. So now, then let's talk about why estate planning is a process. We talked about it cannot be simple. We talked about these are the reasons why it is not simple. But can we just finish estate plan with one afternoon? I sit with you, do it for me. Can I just say it's done? No. It is not possible. Estate planning is a process. So for business owners especially, estate planning is not just about completing the document. It is a continuous process of creating, updating different kind of document throughout your life to ensure the moment you die, these documents become a real guidance for, or your commands for getting things done your way. And the step in estate planning, evaluate your past records, planning your current, and prepare the future. See, those are what we call three-dimensional preparation for estate planning. If you come to do estate planning with Community CPA, and we have that relationship with you. Most of our estate planning clients are also our tax client, so we already have done evaluation of past record, and we are working on the current one by every year through the tax filing season. We understand the client got a new kid and client got new equipment or whatever they were doing. So it is reflected on the taxes, at the same time reflected into the estate plan. Then of course, by doing so, we prepare the future. The future doesn't stay the same. Just depends. For example, if you got a new child, then the future plan will change. Instead of dividing the asset by just 100% for one kid, now you divide them by two. Then the kids grow up and one of them addicted to drugs. Then you may not want that kid to get 50% of your estate the way you originally designed. You may go into design the future to have the remainder income to go to that drug addicted child. So the child can only get $5,000 a month, and the asset, the corpus, would never be touched. So will be saved for that child. So with that said, see how future changes as well. That's your estate plan process. And who can help you to do that? Who are the people doing this as a process? A lot of times we have clients who we say that, oh, have you done estate planning before? Oh yeah, I got that completed already. I have this document. The one we looked at is 20 years old document. Was never touched, never updated. It's a living trust. So you want to work your estate plan with someone you can trust, someone you know, someone you have seen in the community or your family member. So someone that you always can have access to, right? And always available. When you die, that person did not die, or that company did not die. So always available to you. And have experience in close out estate. Setting up a plan is one thing, but after you die, who's going to do the rest of it? Who is going to read out the clause and making sure things are done? Who is doing that? Of course, it's someone you named, but you want to make sure that whoever handles your estate also have experience in close out the estate. All right. So now I want to briefly talk about the three stages, right? The past, current, and the future. So why evaluate the past? Because if there's any changes to the taxes, you got to amend your return to the past. And if the amendment means that you're going to end up paying more taxes, you're always going to owe that taxes. So you want to make sure that you closed out those tax returns. They are done, they're done, and no more going back. You want to evaluate the past, making sure the taxes, everything are in order. If you owe taxes in the past, and one of the things to do is to work out a plan to get the past closed out. You don't want to drag the past into current, planning your estate, and with the tax due that you need to pay for the last 10 years. No. And you want to evaluate your business for the value of the past, because you need to know how much your business worth. Then you can figure out how to transfer the business to your children for the present time. But the past, it is something must be done before you can be ready for the current. So how do you plan for the current? So this is the three-dimensional estate planning process. We talk about the past, right? If you are our client, have done taxes with us all of these years, your past is already taken care of. Your past is already visible, known to your CPA. So when we evaluate your business, and we already have all the data we needed, and we also already knew that your taxes is closed out properly, there's nothing to worry about for the past. Now you are doing the second step, the current life. There are two main categories in estate planning in the current life that people do. These are documentations. A lot of times you hear living trust, that's one of the documentation. You hear family LLC, that is one type of tools, documentations that you would do for your estate planning. I briefly wrote here that, why trust is being used. Trust is a very complex structure, can be made to serve different purposes. Living trust, revocable living trust is just one of the most common trust tools people use. Let me tell you why they use that. They use that for privacy, because after they die, they don't want everybody to know how much estate they left for their children. So that is the top priority for people to do a trust. Then they also avoid probate. Avoid the government lawyers to get into your private business. And avoid probate charges that comes at 3% to 8% by states. And you need to manage and protect different type of asset, and that's under your name. So that living trust will come in to assign who is going to manage that for you. And of course, by structure the trust asset properly, and you stay under the estate tax threshold, then it will save you taxes, right? And also with living trust, and maybe the trustee is your nephew, then the nephew don't charge you anything, so reduces your ongoing maintenance cost, right? So these are the reasons for people to have a trust in the current stage. But they also use LLC. And you need to manage and protect the business asset and, the real estate investment. So those are, you can build them into the family LLC to do a personal liability protection from your business operation. And you can maintain control while you are enjoying the deductions in the current time. And you can also, use the family LLC to make that a larger, more diverse portfolios for the family to own. Many reasons, okay? And your LLC in this regard can be done so flexibly, so that tax saving is right in it. If you're saying that, my experience didn't say so, those will be taxed even more, then you did not know it yet. It is a tool to save taxes. So I do want to cover quickly on the living trust, because a lot of business owners goes, oh yeah, I did my estate planning already, I have a living trust. That's the end of the sentence. I would say the correct statement is that I explored estate planning. I have done one of the document called living trust for my estate. Is there any other things I need to do? The answer is always yes. You know, obviously, you live your life, things are changing, so things are needing to update. How often do you want to update all of these estate planning stuff? My recommendation is annually when you file your 1040 tax return. Normally, what we recommend is that if you do estate planning with your attorney, ask your attorney to also file your 1040 every year. Because when they do that for you, they automatically know to update your estate plan just in case on your 1040 and you bought a vacation home. On your 1040 and you are putting a lot of money into charitable donation, so your attorney would probably turn around introducing to you another type of trust that would give you benefit once that is turned over to the nonprofit. Right? So there's so many things that the person can see when they file your 1040. So don't underestimate the power of managing your financial affairs by simply having the access to your 1040. It is powerful. I know a lot of people do tax return with TurboTax. It is all good. You can do that. But what is not good is you are not providing access to the people who did your estate planning. If you do estate planning with an attorney, but your 1040 is a secret to that attorney, you missed the point. Your estate planning, for sure, not done properly. All right, living trust is about controlling the asset, about the privacy, about avoiding probate, as we mentioned. It's about continuing your business. It's an instruction book after you die. And living trust don't file taxes because they wait until you die. So I always say living trust, revocable living trust is your shadow. They are not a real person. Until you die, they turn into a ghost. They are more powerful than a person. So living trust only file return after you die. It files a return. The form number for that one is 1041. Not 1040, 1041. So the reason is one number more is because it's more powerful. A ghost is more powerful than human, am I right? I think so. I'm not sure how you feel about that. All right, family LLC for business owners, that's the other group of things in the estate planning people do. So the family LLC is asset protection, protect your drug addicted child to ruin your fortune. All right, I'm just giving a really bad example. And I only do those examples because it's a reality. It to me is a reality because it happened. It happened to our client and I see it. So for that reason, that becomes something I say, not because I'm evil-minded and do this kind of imagination. No, I happen to come through these type of clients' family drama. So, asset protection. Estate planning, of course, use that as a tool to pay less taxes, maintain control, and keep asset in the family. Yours, your children's, your grandchildren's, keep that in the family. And also flexibility. That is a understatement. It's hugely elaboratable. It is something that can be done artfully, and I would say that if you do want to explore this channel and this family LLC type of thing and have a separate appointment with us, and we do that for you. And it's a lot to talk about, and it is the best to know your situation and give you just that sliver of needed information based on your needs. Very important. And the difference between trust and LLC, the tax structure is different. You know, remember I said that the living trust, you don't file taxes. You only file when you die for 1041. The LLC, you have to, right? You file every year. And then the purpose of those two are a little different. Trusts are primarily used for estate planning, asset protection, right? The family LLC are typically used for asset protection and managing family businesses. So the emphasis is different. But of course, the living trust, the revocable living trust, is one type of trust that doesn't do asset protection. But all of your LLCs, the family LLCs, they do asset protection. Of course, the ownership. If it is in a trust, assets are legally owned by the trustee for the beneficiaries. Like say, if the beneficiary are your minor children, the trustee is your brother. So the asset inside of the trust is literally owned by the trustee, by your brother, and on behalf of the beneficiaries. But the LLC, the asset is owned by the members inside of the LLC. Could be you, your children, your nephew, your niece, and your grandchildren. It is owned by the members. So that's the difference. All right. And more difference on there is control, right? Trust assets are managed by your brother, the trustee, right? The LLC are managed by everybody, members, okay? And the liability protection, LLC generally provides a better protection from the personal liability for business debt and legal issues. Trust offers limited. But if you have living trust, a revocable living trust, generally speaking, we tell our client that it doesn't offer asset protection. The type of trust that offers protection are the irrevocable ones. So that's why I'm saying trust has variety of type, and just hearing a word of trust doesn't mean you know what entity that is, right? Privacy, trust offer more privacy. You can't find them on internet about your living trust. It's a private document existed with you and with the person who created the trust. And but LLC, people can go on to Secretary of State, start checking out who is the officer, figuring out who is the owner, depends on how you're registered. So the taxation-wise, you already know trusts don't file taxes. The living trust don't file taxes, only LLC does, right? The ongoing maintenance, the LLC, annually you have to file taxes. The living trust is something you do want to maintain, but only when you have life changes, right? You got a new baby or spouse passed away or something like that, right? So, but those will be reflected on your 1040. That's why I say that if you want to get into a relationship with a professional to handle your estate planning, and you need to know that person, that company, that firm need to be the one handles your 1040. Very important. Asset transfer. Trust can provide for smoother, more private transfer when you die, right? Because it doesn't go to probate. It just is an internal matter. But LLC requires change of ownership, registering with the state of ownership change. On your tax return, there's reflected ownership change. So are they private? I mean, if you are running for president, your tax return is not private. That's why a bunch of those CPAs have tax return, have President Trump's tax return copy. Of course, it was public information, right? So that's the difference. Of course, when we work on your estate planning, other than we talk about the past, we want to evaluate the past, right? But for the current work, we use both trust and LLC. So that way we give all the best into one, so structuring you differently and select the best way for you to do it for today. That kind of concludes our three-dimensional, the number 2, right? The current development. And what happens on our third piece, remember we said that we need to evaluate the past, work the present, prepare for the future after death. So when we are working on the present, you automatically already preparing for after death. So these are different trusts I'm giving you that will call for benefit of after death for different reasons. And the revocable living trust is the one I was talking about. You don't need to file taxes. It comes to become a ghost after you die. File 1041, a little more senior number of tax form. Irrevocable trust, once you establish it, you cannot change it. So it creates a very safe place for asset. So even if you put your asset in irrevocable trust, and it doesn't really matter how much money you owe to the government, and it's not relevant. And it's not going to be used to pay for your debt because it belongs to your beneficiary. Okay? So there's all the other trusts, right? Like charitable trust is another one. And there's a lot of, you heard of people saying that, okay, I got so much money, I cannot finish using it, even if I live to 130 years old. I want to donate that into a nonprofit, and just whatever nonprofit makes out of my money, and give that to me, and so that I can spend. But after I die, all the money and can go to a nonprofit that I desire, I want. So those are trust setup. Can be so flexible. If you dream up a way to use your money after you die, and you tell me, and I'll give you a existing structure that allow you to do that. Because it is a creation on the go as we live, evolves with time, and today's solution is not suitable for tomorrow. That's why estate planning is an ongoing process. Don't ever say, oh, I finished my estate planning. No, you can't finish. And you haven't died yet. If you die already, you finished it. But as long as you live, as long as you create, like our first generation of immigrants, we work so hard. We have never ever seen money like we see today, right? We made money. And those money, we want to properly treat it. So we evaluate the past, we work the present with both trust and the family LLC structure, and then we prepare for the future. And you can do anything you wanted for the future by implementing the structures you can implement today. All right, wrap up. Estate planning service, if you are interested in that, we provide that service. So we have 5 locations of our company, and today I am doing this webinar at Houston, Texas. This is our newest branch. We started it from July last year, so we are not here a year yet, but our business practice has existed since 1998. So we have lawyers on our team, we have CPA on our team, we have wealth management on our team. So it is a complete CPA firm that would take care of you from what you are doing from what you are doing today to what you want to do tomorrow. All right, these are our partners, and it is on our website. If you go to appointment tab and click to have a meeting with someone in our firm, the list is coming up. It is the partners, and obviously you can see our calendar on that tab, so you know when we're available for you. You can book your appointment with us, and you can email us as well. And this is our YouTube channel. It has this round logo, so you can find that and subscribe to our channel. And you can also email Catherine at communitycpa.com, and she will make sure that you email us. We'll get hold of you, and we'll take care of you, in the long run. And our clients, our longest clients is the the fourth generation of clients. So don't want to say any more big numbers because, you know, I'm not 100 years old yet. So if I do 5 generations, I don't know whether I'll run into 5. Unless my clients' family are so prone to get married, have kids early, right? So you might catch up to 5 or 6 generations. But right now, our biggest record is 4 generations of family. So with these type of relationship, of course you build on the estate side. You continue that wealth for the client and generation after generation. So this is what we are proud to do. And we are on the market long enough that to say not only we know what to do, and we also have experience in close out the estate. So not just build it, but close it out. So that is the whole process. A lot of times practitioners may know how to do it one way or another, but to close it out, it is a experience only kind of endeavor. You can't imagine a closeout. You have to do it. And without that piece of experience, you are not experienced in everything. So at our firm, with our history of practice, and we can offer you that comfort so you can rely on us. And we open 6 days a week, as you can see, right? From 8:30 to 5:30, Monday to Saturday. And we like to hear from you. If you like this video, don't forget to thumb up the video and subscribe to our channel. I am so happy to see you here, and I will see you again on Tuesday, every Tuesday, 3 p.m. and Saturday, 3 p.m. Bye-bye. Have a great weekend.